Hi, Todd Pouliot with Gateway Financial. Feel free to visit us at mygatewaymoney.com. And I got another exciting checklist here for you. Buying a home is one of the biggest financial moves that our clients will ever make. There's a number of issues that they should be aware of, including how the cost of purchasing and owning a home will impact their overall financial planning goals. This checklist, we're going to cover a number of financial issues that our clients need to consider when buying and owning a home, including cash flow issues, such as the cost to maintain the home once you own it, and the impact that owning a home will have should one spouse need or want to stop working to raise children, as well as how long they intend to live in the home. Number two, financial issues, including your debt ratios, qualifications for advantageous mortgage terms, and or special lending programs such as VA loans, and the loan application process. Third, income tax and estate planning issues, including mortgage interest deductibility, basis tracking, and how to properly title a home. Insurance issues, lastly, including property and casualty policies and an appropriate level of life insurance coverage. So I think this is a comprehensive checklist that covers the type of issues that advisors should be discussing with their clients who are considering purchasing a home. And clients are not always fully aware of the financial ramifications of such a major decision. And it's our role as their advisor to ensure that they are equipped to deal with these issues and allowing them to enjoy home ownership to the fullest. So as we always do, we're going to come and share our screen with you to show us the checklist. And we should have a good view here. Cash flow issues. Do you need help determining how much it will cost to own and maintain your new home? Just having that mortgage and insurance and everything does not cover everything. So mortgage payment, property taxes, homeowners insurance, and hopefully there is no PMI. Also the cost of utilities and to maintain a property. And also, is there any commuting costs that might be adjusted? I know when I was a youth, my father used to drive an hour to work, and that was an expensive cost. He probably did not calculate on how much time he would spend driving to and from his office. Childcare and also private education if you're not living in an area that you want to send your child to the local public school. Any changes or improvements to the property that you may need to make? How are those future expenses going to impact your financial situation? And will the purchase of impact the ability on other goals that you may have? There's always trade-offs in life. There's reaction and equal and opposite reaction, and ability to save for retirement. Prioritize your goals, set them all out, and then rank them in an area to understand those trade-offs. And do you have a spouse or partner you plan to live on one income? So you could have a stay-at-home parent situation with children. Consider how the new home and carrying cost fit within your budget and make adjustments accordingly. And will you be living in the home for 5 years or fewer? If so, consider doing a break-even analysis to see if it may be more practical to rent rather than to own. Recently, we've had a situation where a couple came to us, did not want to go to the local public school, and the cost of the private school they wanted to go to was a little excessive for their plan and their budget, and they considered moving to a new location. Was it better to buy a home in a new location, or was it better to rent that home? So great thing to think about if it's only a 4-year situation. And what do? Do you stay during college? And that's another 4 years. So those are the considerations that you need to make. Any mortgage related issues up next? Do you need assistance in considering the financial impact of different types of mortgages, not only just in years? Look at the terms on fixed and variable rates. Big topic of conversation is we've had historically low rates. Now we're seeing them climb back to what I would call normal. A 5% 30-year fixed rate is, to me, normal. In fact, it's much cheaper than the first mortgage I ever got, which was 8.25%, and we thought we were getting a good deal back then. Look at FHA loans to conventional loans. And reverse mortgage may make sense in some situations. I'm not a huge fan of them, but they are an option to look at. Did you serve in the military? You may be eligible for a VA home loan, might offer you a lower interest rate. And do you need assistance in evaluating competitive interest rates? Just don't go with one bank. Possibly look at a broker or do some online research. Mortgage payment, P&I, property insurance, taxes, 28% of your gross monthly income. Starting to get a little edgy there on the budgeting aspect. So make sure you understand that they may not be willing to lend you the money. One of the things I have found over the last several years doing this, banks always offer you more money than you should spend on a house. Be cognizant of being house poor and make sure you are living within your income means. Are you retired and have no earned income? They may look at your portfolio, and that's when you want to have your advisor there by your side helping you with the portfolio. Also, pensions and Social Security may also be taken into consideration. If you have other long-term debts, look at that ratio of 36% or more of gross monthly income. May not be willing to lend you the money again. Again, I get very nervous when I hear about people coming too close to those numbers. Cash flow and budgeting are very important. Don't be house poor. Do you have a low credit score or poor credit history? Remember, review your credit report to ensure there's no inaccuracies. You can do that annually. I highly suggest everybody does that annually. And you may be charged a higher interest rate or denied a loan. Understand what that costs you monthly, yearly, and the total life of the loan if you have low or poor credit. And improve your credit score. Pay your bills on time and reducing your debt load. Do you anticipate making any large purchases or closing cards in the months leading up to the purchase of your home? Make sure you do not rock the boat. You want that mortgage to go through very, very smoothly. Just talk with your lender. Hey, here's what I'm trying to do. Here's what I think I should do. Make sure you don't make any large purchases just prior to that mortgage closing. You could radically impact the rate that you get. Down payment and closing related issues. Do you need help to determine closing cost? Loan origination fees, processing fees, points, attorney fees, these all add up and can add to the cost of owning a home. And do you need assistance on how much of a down payment you should make? Paying conventional loans, put less than 20% down. You may be subject to PMI, private mortgage insurance, and emergency fund issues, and how different loan amounts impact your cash flow. Again, don't be house poor. Do you lack liquidity and need assistance in determining how to fund the down payment? Consider if you have a Roth IRA. Again, in some of my other videos, I talk a lot about Roth IRA. Contributions can be withdrawn without penalty at any time after that 5-year clock, and 10,000 of earnings can be removed without penalty or tax for the first time home purchases, as long as the Roth account has been open for at least 5 years. So sometimes it's better just to open up a Roth account just to get that clock starting. And again, you can play with that on a tax advantage basis. If you have a traditional IRA, 10,000 for penalty free for first time home purchases. Income taxes still do apply, so be cognizant of that. Work with your tax accountant, your CPA, or your enrolled agent. And a 401k, some plans have loan provisions. I am against loans in 401ks typically, but in-service withdrawals and loans are an option for you. And there's sometimes down payment assistance programs that may be available to you. All right, here we get to the big tax planning. Will property and state income taxes exceed $10,000? If so, you will not be able to deduct any amount over $10,000. This all leads back to the Tax Cuts and Jobs Act of 2017. Remember that sunsets in 2025. We also do have a different administration, which may lead to some more tax changes prior to that. So make sure you're aware of all the tax laws that you need to be aware of for tax planning, not just tax preparation, but tax planning. Look forward. The mortgage debt exceeds $750,000. If so, you will not be able to deduct the interest on the debt exceeding $750,000. That number seems large in some areas. In some areas, it seems small. So depending on where you live, that number can be small or big. Will you use part of your home for principal place for your business? Consider home office deductions. We're seeing a lot of work from home people now, or people that are starting a side hustle, and that becomes their main source of income. And again, it must be used exclusively for business purposes. Do you plan on making improvements to the property? Track the costs of improvements so they can be added to the cost basis, reducing your gains when you eventually sell your home. Should your home be owned by one spouse or owned by a trust? Trust can avoid probate. Now, I'm not a big fan of trying to avoid probate. It's not as strenuous or as most people think, but that is a way to avoid some probate costs there. It might be important for properties that are located in different states than where you reside. And that's where people find that it's strenuous going through probate. And some states allow a transfer on death or TOD deed. Love that, highly recommend that. But again, every situation is different. I love the TOD deed. And will this purchase require you to update your estate plan? Pretty much this is a yes. So make sure you update your estate plan when you move forward. And any other issues that we have here is a second home or a rental property. How should it be titled? Any potential liabilities? Possibly use an LLC to protect yourself from personal liability. And will you need life insurance and change in the light of the new mortgage? So you have a lot more debt out there. And if something should happen to you, make sure you have enough life insurance. And that's where some very good, inexpensive term policies can come into play. Review your home and auto policy. There might be cost savings for bundling with one carrier, one insurer. And an umbrella policy, highly recommend these, are very inexpensive normally. Increase the limits if you already have one as well. And any state specific issues to consider. Some states offer tax benefits for homeowners. Again, I will caution you because of that Tax Cuts and Jobs Act. People you say, well, the mortgage is deductible. The mortgage is deductible. Well, that's no longer the case since they've doubled the standardized deduction. A lot of people aren't reaching that. I forget the exact stat of how many people take a standardized deduction, but it's pretty mind-blowing how many do. So don't think that the interest deduction is something to look forward to. Rather, paying that debt off may be a better way of doing that. And it's a home purchase result of an employment change. We're seeing people migrate a lot between companies, jobs, careers, wherever, and may be eligible for relocation assistance from your employer. And lastly, there's some online tools that's not in our checklist here yet, but some cities are actually paying you to move there if you fit into their parameters or what they'd like to do. So that's another thing to consider if you're considering transferring to a different city or a different state. There's some economic benefits for that as well. But this is a very in-depth checklist, a lot of deep thought that goes into this, a lot of calculation that goes into this. The price of homes over the last 2 years have skyrocketed. Very, very low interest rates. People are in bidding wars to buy homes. You know, how does this affect your financial plan? We're seeing people 50,000 over list. How am I competing with this? How are banks underwriting these loans? A lot of things that are out there about home purchase right now that is very scary if you're a buyer. And as a seller, you know, I'm going to sell my home, but now where do I move to? So this is a great checklist. I hope you enjoyed it. Again, we really need that thumbs up and that subscribe so we can keep you informed. And I hope you're sharing these videos with your friends. Don't forget to ring that bell and we'll keep these videos coming. And thanks again for watching.